For TraderInsight.com, I'm Adrian Manns, and it's time for your daily dose of the doctor. Well, markets gapped up on Monday. No big surprise there. There's been a lot of volatility. And a lot of times when you see these big opening gaps coming your way, the first thought you have is this is going to blow out the planned trades that I have, or this is going to work against what I thought was going to be happening. But a thing that I like to do is to start focusing on where there might be support and resistance that can play in my favor. CCI, Crown Castle International, was a good example of all this stuff at work this morning. We had a planned trade on the long side of the market, so it was a buy at $95.19 with a stop at $94.61 and an initial target at $95.90. So with that $95.19 entry, right, the first thing that I'm looking for is where's the central pivot? Well, it's at $93.53. And the first resistance is at $96.48. But as I've showed you guys in the room on a bunch of occasions, something I like to do is on the setup day, look at where there are key inflection points and things that are going to be key support and resistance on the day that the trading plan anticipates entering the stock. So here we see the chart of CCI on Friday. So this was our setup day. And the first thing that pops out is there's a couple areas of really significant support and resistance and volume, right? Volume by price is significant as you're looking at this closing range, and also down through a couple other ranges over the course of the day. If we expand this a little bit, it'll make it easier to see what I'm talking about. Right here at $94 and about 85 cents, right? We're just eyeballing these, so these are going to be sort of rough guesstimates. $94, 84, 85 cents, somewhere in there. And then again down at this level, about $94.21. And again down at $93.72, right about in there. Those areas represent someplace that something significant happened, and it's also going to be an area that we can key off of for a different entry than the one that we're planning from our trading plan. So if the stock shoots higher in the morning and blows out the entry or something, we can wait for a move back down to one of these levels of key support and resistance and then look for a reversal back higher again in the direction of the planned trade. Now, a bunch of things happened this morning, and we talked about them all in the first hour trading pit as they were going on. Made for sort of an interesting setup in CCI. First thing we see is that the stock opened all the way up here at $95.54. So that's well beyond the stated entry on the trading plan. As a matter of fact, it's 50% of the distance to the target. That involves some rules then, right, about first entry, second entry, all that stuff. This automatically would qualify as a second entry when it comes down. And that's because I've got a rule in my trading plan that says if there was a move 50% of the distance to the profit target that occurs without me, I count that as a first entry and then only take one additional entry on the plan. But that's not what we're really interested in here. What we're looking at is we had this reversal back down, and look where it went. It went straight down to that 94.84 level, popped down to about 94.70 or 94.69, and bounced higher from that 94.84 key support and resistance inflection that we identified on Friday. Stock then goes and moves up, and on its way actually does trigger that 95.19 entry. But there's a couple things going on that should have you looking for what is probably going to happen here. So here's the green line is the stated entry line. Then, of course, it comes up. It gets all the way on that bounce move up to $95.84. So that gets within 10 cents of the profit target and then reverses. And in this case, our rules tell us you're out at $95.55, which would be the 50% target area and would be right in there. So what you wind up with on the first leg of that move is an extra 35 cents of potential profitability, right, from 94.84 up to 95.19. And when it comes back down again and gets into this 94.84 zone a second time, you've got the opportunity for another bounce, and that bounce gets up into this 95.19 entry area, closes right there, opens the next bar, can't quite make it through, And that's why in the room we decided that was probably all that bounce was going to be worth in terms of potential upside. Now, it did, of course, it got up into $95.39. That's a significant extension. The important thing is we knew why we were drawing this line here, right? It represented the entry threshold for where we really expected something to happen, and it represents then the level at which price really was inflecting over the course of the morning, and gave us a good reason then to use that as a scalp exit. So that's the kind of thing I'm looking for when a market opens and travels beyond what I was expecting to have happen right out of the gate. Gives you some other ways to approach the price activity in the morning. Allows us to turn some lemons into lemonade, as my little boy would say. So with that, if you have any questions, shoot me an email, adrian@traderinsight.com. If you're interested in attending our webinar on Saturday this week, it's going to be me covering some equities trading strategies and Tim Bigham talking about what he's doing in the options markets. If you're interested in that at all, click on the link on the screen. It's a free webinar, about 2 hours of material this Saturday, October 29th, 2016 at 7 a.m. Pacific time. That's 10 a.m. Eastern. I hope you had a great trading day today and an even better one on deck for tomorrow. The best trader education anywhere, only from traderinsight.com.